Hey people, I welcome you back to Caroline's Online Academy. This is another video in which we're solving dissolution of partnership problems. And we're solving a realization account problem, a problem in which we need to prepare the realization account. This particular question that I have for you was asked in the sample question paper for the year 2018 and 2019. Without further ado, let's start solving the problem. Pradeep and Rajesh were partners in a firm sharing profits and losses in the ratio 3:2. They decided to dissolve their partnership firm on 31st March 2018. Pradeep was deputed to realize assets and to pay off the liabilities. He was paid rupees 1,000 as commission for his service. Okay. So they're given the realization expense and commission and all in the first paragraph. This is something that is not done in any of the other problems. So children tend to miss this part. Okay. The financial position of the firm is creditors are there, Mrs. Pradeep's loan is there, Rajesh's loan is there, investment fluctuation fund is there, capitals are there, building is there, investment is there, debtors, provision for doubtful debts, bills receivable, bank, P&L account, goodwill, intangible asset is also there. As I told you, every sample question paper problem will teach you something. So it is very important to solve. Prepare the realization account. As I've already taught you before, when you're told to prepare the realization account, in without even reading the adjustments, you can transfer all the assets and liabilities to the realization account, assets to the debit side of the realization account at their book value. So to building account, the amount here is 1,20,000, and then that is followed by to investment account 30,600, and then we have debtors to debtors account. We have to transfer the gross amount as discussed in various questions earlier, and immediately transfer provision for doubtful debts to the credit side of realization account so that you don't forget later. Doubtful debts. And that amount is 4,000. And then we have bills receivable to the debit side, to bills receivable account. And that will be how much, my dear children? 37,400. And then you're not supposed to transfer bank, obviously. Now, what about goodwill? Are we supposed to transfer goodwill or not? An intangible asset, existing goodwill is usually written off while doing reconstitution. Well, while doing reconstitution, it is written off. But when it comes to realization, dissolution of the firm, you transfer the goodwill also to the realization account along with all the other assets. So that's done. So once we transfer the assets, we add them up and write it in the outer column. All right, now we move on to the liabilities. We have creditors, which is an external liability, which will be transferred. Creditors account, 80,000. And then we have Mrs. Pradeep's loan. As I told you, only the partner's loan will not be transferred. Mrs. Pradeep's loan will be transferred. And that is 40,000. And Rajesh's loan is partner's loan, so it will not be transferred. And I've already taught you earlier, investment fluctuation fund will always be transferred to realization account. Investment fluctuation fund will always be transferred to realization account. So by investment fluctuation fund. Though we transfer investment fluctuation fund and provision for doubtful debts, we don't pay anyone for the investment fluctuation fund or provision for doubtful debts. When we're settling all the liabilities, we don't settle this because it's an internal liability. You don't have to pay anyone for this. That will be 8,000. So after transferring everything, you add them up and write in the outer column. That is how much, my dear children? 1,32,000. We go to the adjustments and try to sort that out. Pradeep agreed to pay off his wife's loan. So Pradeep's wife's loan is a third-party liability. When a partner takes over a third-party liability, the journal entry is very simple. Realization account debit to partner's capital account. So to Pradeep's capital account, Mrs. Pradeep's loan. Just for future reference, I'm writing that. And Pradeep agreed to pay that off. So that is 40,000. We've written it on the debit side. half of the debtors realized 12,000 and remaining debtors were used to pay off 25% of the creditors. Actually, it's creditors. Okay. There's a typing error there. It's actually creditors. This is creditors. So half of the debtors realized 12,000. So when an asset realizes, the journal entry is bank account debit to realization account. So in credit side of realization account, we write by bank, and below that we write debtors 12,000. The remaining debtors were used to pay 25% of the creditors. So which means what? The liability of the partners, liability has taken over debtors. 25% of debtors, creditors have taken over the remaining debtors. So that is a if you have to pass a journal entry, it will be realization to realization, which actually is no entry. When the creditor and a liability takes over the debtor, it is no entry. Understood or not, my dear children? Investment sold to Rajesh for 27,000. Rajesh happens to be a partner, so I'm going to write here by Rajesh's capital account, because the journal entry when a partner takes over an asset is partner's capital account debit to realization account. Investment. That'll be how much, my dear children? 27,000. Okay, so that is done. And building realized 1,52,000. So under by bank, I'll write building. $1,52,000. That's done. Okay, remaining creditors were to be paid 2 months. After 2 months, they were paid immediately at 10% per annum discount. This is something that I've already discussed. Am I right or not, my dear children? The remaining creditors. Who are the remaining creditors? 25% of the creditors have taken over assets. So remaining creditors are 75% of the creditors, total creditors. So creditors are here. Out of the 80,000, if you calculate 7, understood or not, my dear children? So the 60,000 is given a discount of 10%. But that is for what? 2 months, 10% per annum, and we are only paying them early by 2 months. So they will only give us 2 months discount. Understood or not? This 10% flat discount is per annum, and the time period is given, and per annum is given. You cannot give just 10% discount to calculate the discount amount. Understood or not, my dear children? So that would be 1, 2, 3. 1,000 rupees is the discount that you're giving. So remaining creditors were 60,000, and they've given us 1,000 rupees discount. So which means 59,000 is the amount that we will be paying. Understood or not, my dear children? So when you pay creditors, the journal entry is very simple to bank account, because it's realization account debit to bank account, and you write creditors. You paid them 59,000. All right. So that is also done. Bills receivables were settled at a loss of 1,400. We have bills receivable for 37,400. It was settled at a loss of 1,400. So how much did we get out of it? We got 1,400 rupees less. So bills receivables 36,000. Okay, so that is also done. And then what do we have? Realization expenses amounted to 2,500. This is where the whole thing comes into play, my dear children, what they gave in the first paragraph. See, they're talking about realization expenses here, and then they've given the actual realization expenses here. So they're trying to confuse you. You're not supposed to get confused. Understood? Pradeep was deputed to realize asset and pay off the liabilities. He was paid rupees 1,000 as commission for his services. So this 1,000 is also realization expense, but this is payable to Pradeep, and this is paid by the firm. Nowhere here does it tell that the realization expenses are borne by Pradeep. Pradeep does not bear the realization expenses. He just what? Does the realization work, for which he is paid a remuneration of 1,000 rupees. Understood? So the realization expenses is paid by the firm, borne by the firm. When the expenses are borne by the firm, the journal entry is realization account debit to bank account. Understood or not? So I'm writing to bank. Under that, I've written realization expense, and the commission payable to Pradeep will be transfer to his capital account. The journal entry is realization account debit to partner's capital account because it's an expense and therefore realization account will be debited. It's payable to the partner and therefore partner's capital account will be credited. Commission, and that was rupees 1,000. Am I right or not, my dear children? So with that, we're not supposed to immediately close it. We just have to go and recheck if we have realized everything or not. Building, we have realized investment was taken over by Rajesh. Debtors have been done. Bills is provision for doubtful debts will not be paid to anyone. Bills receivable is done. Bank will not come. P&L account will not come. Goodwill. Okay. They haven't told how much the goodwill has realized. But the rule is very simple, my dear children. If the question is silent with respect to how much a particular asset has realized, and if that particular asset is a tangible asset, then it realizes the book value. If it is an intangible asset, then it realizes nil, zero. Understood or not, my dear children? So goodwill will realize zero. So we will not realize it. And then we go to the creditors have been paid off. And then Mrs. Pradeep's loan was taken over by Pradeep. Rajesh's loan will not form part of realization. Investment fluctuation fund will not be settled through realization account. And therefore, everything has been done. All that is left is to balance the ledger. We find that the debit side total is 2,67,000. The credit side total, after adding this, I forgot to add this here. Okay. So the credit side total is 3,59,000 and the debit side total is 3,28,000, which means there is a profit. Am I right or not, my dear children? And how much is that profit? 3,59,000 minus 3,28,500. The profit happens to be 30,500, my dear children, which is a correct answer as per the suggested answers too. Its profit will be distributed to the partners in their whole profit sharing ratio. In this case, it is Pradeep and Rajesh. And the whole profit sharing ratio happens to be 3:2. So the 30,500 into 3 by 5 for Pradeep. 30,500 into 2 by 5 for Rajesh. And with that, my dear children, this problem is over. As I told you, preparing realization account is very simple once you have the basic fundamentals straight. And I think through these problems, I've taught you all the necessary adjustments. So you should be good to go. Kindly watch the videos one more time and then solve them one more time yourself. If you get stuck somewhere, go to that part in the video where the solution is given. You should be good in one or two when you practice 1 or 2 times. These are easy 6 marks that you can get in the exam, so don't miss out on these. My dear children, easy 6 marks. You should not miss out on easy marks. With that, we have come to the end of this video, my dear children, and the realization account series 2. From the next video onwards, I'll be solving questions based on passing journal entries in dissolution. You people take care, have fun, and